Hi everyone, welcome to the all-women panel at the Deal Street Asia PVC Summit 2023. My name is Tabitha Diela, and I'm your moderator for this panel. So we're going to discuss environmental, social, and governance integration with business strategy as key to long-term value creation. Join me today are Aruna co-founder and Chief Sustainability Officer Utari Octavianti, and East Venture partner Avina Sugiarto. She's in charge to invest in seed-to-growth stage technology companies and drive sustainability and integration of ESG practices. And we also have GoTo Group Head of Sustainability, Tana Sullivan. She leads ESG efforts across Gojek, GoTo Financial, and Tokopedia. So, bolstered by both regulatory pressure and the public demand for more ESG-compliant investing, it's safe to say that we are no longer at the start of a conversation about ESG and whether or not companies are compelled to deliver on ESG. Indonesian companies and investment firms have been adopting ESG principles, starting with beefing up their ESG team, like what Aruna did, and to initiate the release of annual sustainability reports like GoTo. Gojek also has released their reports, and also East Ventures. So today, let's move the conversation forward to what we have learned so far. What have we seen the proof that integrating ESG with business strategy is beneficial, and what is the best practice for integrating ESG with our business strategy? So I let our panelists to kindly introduce themselves first, to just a minute to set a tone, and so our audience will have a better understanding of your roles. Can we start with maybe you, Avina?
Thank you, Tabitha. Pleasure to be here. Hello, everyone. My name is Avina Sugiarto. I'm a partner at East Ventures. We are a venture capital firm. We started very early in Indonesia in 2009, so we'd like to think of ourselves as a pioneer in this region. We invest across seed and growth stages of startups across different subsectors of technology. We focus in Indonesia and also Southeast Asia. So happy to be here with two of our investing companies. Actually shared a long history with Tokopedia, which was our first investment back in 2010, and we were also the first institutional investor in Tokopedia. And also Aruna, we invested very early in the seed stage. So I think just to share right now, we are managing $1 billion of AUM. We just did a recap actually of 2022 investments. We invested $211 million across 105 deals. So happy to be here and share more about ESG integration.
Thanks so much. And you, Tana?
Hi, everybody. I'm Tana. And as you already mentioned, Tabitha, I head ESG for GoTo Group, which covers the three operating companies in our group. So Tokopedia, GoTo Financial, and Gojek. And I'm really excited to be here to share a little bit of what we've learned so far about integrating ESG best practices into our operations. So next.
Oh, yeah. Thank you. My name is Utari. I'm the co-founder and Chief Sustainability Officer of Aruna. So yeah, like Alvina mentioned, we one of the EV portfolio. We are the company that focused to connecting the small-scale fishers and get them to the global market. And what we understand, if we want to make this business sustain, then we need to start with ESG. That's why we start like this department in our company.
Thanks so much. Very beautiful. So let's set the context. For starter, Avina, let's cover the basics first. You are in charge of driving sustainability and ESG practices in East Ventures investments. You must have heard this question many times, but why do you think tech startups in Indonesia should care about ESG?
Good question. So I think you cannot look at ESG in its own isolation, right? ESG is just one aspect of risk management, and we look at it to be integrated in business functions and operations in the fundamentals of the business. So at the end of the day, it's one pillar that is being added more methodically today in addition to looking at company operations, business fundamentals and operations, today we also need to look at environmental, social, and governance risks, right? Corporate governance and business integrity, we think is very, very important part of how startups operate. I think you see today, if you don't have a good corporate governance and integrity, startup, even in the late stage, can really falter. And hence, from our perspective, really integrating that mindset of having good corporate governance and business integrity is very, very important to have very early in a startup journey. Also, I think on the other sides, right, the environmental and social aspects of it. We also want to make sure that our startups are also mindful about taking into account social aspects, including, not hiring child and forced labor, for example. So things that are intuitive, but right now having a much more methodical aspect because we're looking at IFC performance standards in terms of integrating and making sure our funders are also aware of those risk management. So that's on the one side. The other side that we're looking at is on how are you doing in terms of doing good and what is the impact, the positive impact that the startups are doing. And from our perspective, each startup is actually trying to solve a problem, right? When founders come to us, you have a problem statement and you have a solution to that problem. And from our perspective, that's essentially a mission that the startups can have to solve and being able to contribute to the economy. So I think the ways that you are thinking about your mission and how is your purpose can also help the economy, the people, making it more inclusive. That's positive impacts that startups can have.
Right. Do you think, what do you think when people consider that what you do is actually only a virtue signaling to attract global blue chip investor, for example? Do you agree, or what do you think about?
I think realistically, right, just implementing ESG cannot attract blue chip investors. You need to have a good fundamental business operations and tractions. I mean, if you have good ESG, but the fundamentals and tractions is not strong, investors will not be interested to invest. So I really disagree if you're just doing it for, merely trying to attract investors.
And what about VCs like yourself? By adopting ESG practices, is it also a signal to attract LPs into your funds?
I think similarly, like startups, right? ESG alone will not attract investors' capital. So it needs to be integrated to the whole investments operations. The team needs to be strong, right? We still need to invest. You can't just focus on ESG and not invest, then there is no track record of performance. We do work on value creations and a lot of other initiatives that we do. So I think just to share a little bit of examples that we do in terms of value creations, we work on East Ventures Digital Competitiveness Index, which is a third year in a row. This year will be a fourth year in a row whereby we map the different regions' competitiveness in Indonesia. And that study is being used by our startups, actually, Aruna here, in terms of looking at regions where they can expand as well. So I think, just ESG alone really can't do it in its own isolation. So it needs to be integrated in the whole purpose and also operations of the business.
Okay, so move on to Aruna, Utari. Mbak Utari, so you worked directly with farmers, not farmers, fish farmers.
Fishers.
Yeah, fishers. And coastal communities. And since the beginning, you already set your mind on ensuring sustainability. Now Aruna can afford analysts and advisors, but can you take us through from the beginning? How did you start incorporating ESG considerations into your operations, and what are the outcomes? Can you share the metrics that you use?
I think ESG is important if we can align it with this business mission. Like since the first day we start Aruna, we understand that if we connect the fishers to the market, then it means the income of the fishers will be increased because we help them to not just buy the seafood but also process it and give them value added of the commodity of the seafood itself. So by setting this standard, we already touched the S point from the ESG which related to environment, social, and the governance. So at the first day, Aruna only focused on the social, where our metrics is related to the number of the fishermen and the number of their income. In 2020, we calculate the fishermen that already joined Aruna can have a better income, 3 until 12 times higher. So it's already by helping and creating this business, it will help also our fishers. But then after we continue growing this business, we understand the part of E and G is also important, which related to the environment, how we can measure and understand that the fishers will do like sustainable fishing practice. That's why for now we aiming to get the global certification to ensure that our seafood that produced by our fishermen is already eligible and named as the sustainable fishing practice. And about the G, it's related about the governance. It's about how we relate to our internal business process to ensure every governance that comes from our company is already proven and eligible to do like the business growth and the continuity of our business.
Okay, so you mentioned they produce more with ESG procedures.
Yes.
So is there any trade-off of applying ESG to productivity?
Yeah, I think most of the trade-off is more like how we want to commit to create the ESG, because sometimes maybe most of the people that don't know ESG will think that ESG is something that was complicated. It will giving us more things to do, especially when we want to focus on the business growth, but then we need to concern about the ESG. But I think it's also good for us to set up the ESG metrics since day one, because for example, in Aruna, if we want to do like, for example, the efficiency for the transportation, it will relate it to the number of carbon footprint that produced by our company. So it will be do one and get two things. First, you get efficiency. The second, you will get the reduce of the carbon footprint from your company. So I think it's more like how we can set up the metrics that will help your business to be growth. It's not about helping all focus on environmental only, but also check what is the point to connect between the business goals and also the ESG goals.
Right, thanks so much. So Tana, hello.
Hi.
Being a listed company, you have to have a report on ESG. It's mandatory. But can you share with us how ingrained actually ESG practices in your company?
Look, we actually produced our first report prior to going public.
Right.
And yes, it's a mandatory exercise now, but what we really wanted to do was preempt a lot of the expectations of us as a public company. And in order also to attract and be more compelling for world-class investors. And so I think for us, look, ESG is not a siloed effort. I may be part of a standalone function within the group. But that said, our approach to ESG overall is that we are making operational shifts. We are finding ways to be more cost-effective through ESG. We are finding ways to be more efficient, more impactful, more measured, and strategic about when we talk about positive impact, which is, by the way, by very virtue of our business and our platforms existing, we are inclusive, we are contributing positively to the economy. You can read all the publicly available information around that. But what we wanted to ensure was that we are actually applying a systematic and strategic approach to all of this, that we're calculating the right things, that we're following the right indicators. And I think that's where we have to look outside, where we have to look at a lot of the international standards, frameworks, guidelines around this, so that we're comparing ourselves to the best of the best as it relates to ESG. I'll leave you with a couple of headlines. One, ESG at GoTo, we are not a cost center. In 2022, we are very proud to say that everything we did from an ESG standpoint either reduced or replaced operational expense for the company. So this is, again, this I think already kind of debunks the myth that ESG has to be a cost to the company. Second, if I do my job well, I shouldn't have a job in a few years. You won't need an ESG head or team or what have you, because you've institutionalized ESG knowledge, awareness, understanding, and the ability across different business units to be able to apply it to their day-to-day work. And so I think these are the kinds of things that we adopt as philosophies when we're approaching ESG, but just like Avina already alluded to, I mean, we embed it as part of our overall, we don't have a standalone ESG management system. We actually just embed ESG into the existing risk management system. We embed it into the existing auditing processes. We embed it into all of the existing governance structure of the company so that by getting the G part right, the E and the S will be more organic in terms of how it follows.
So by doing that, and you said with cost efficient and stuff, is it happening? Is it affecting Goto's return? Is it make you more profitable instead?
So I'll give some examples because remember, we're a baby. We're 2 years old. I mean, as a function anyway. Give us a little bit of time. I mean, look, ESG overall, sustainability as the umbrella term is for it. It's a long-term game, right? We're not looking to generate revenue within the next 12 months or 6 months. We're not under the same pressures necessarily as some of the business lines to generate and demonstrate growth for the company. That said, we have to ensure that we're not a cost to the company either. And so if we can even balance out at zero or eventually be more cost effective for the company and or our merchant or driver partners, that's our goal. And so some of the examples, I mean, in 2022, we were able to reduce OpEx for our fulfillment centers on the Tokopedia side, 20% on average. Why? Because when we actually spent time as a team in the fulfillment centers, what we realized was there was a lot of leakage of primary packaging coming from our FMCG suppliers. And actually, there's a downstream market for that. A lot of packaging manufacturers in Indonesia purchase waste material from overseas and pay a 20% increase, charge a 20% increase for recycled packaging. So instead of importing, because there's no recycling infrastructure, minimal, ineffective recycling infrastructure, we are supplying them with the waste material in the first place. We are walking them through the FSC certification so that, it's cutting out, so that at the downstream side of it, they can actually sell it back to us as recycled packaging. So now out of Dilayani Tokopedia, which is our fulfillment centers, now you're getting everybody, without you even probably knowing, 100% recycled boxes that is FSC certified and a reduction in cost from an operational standpoint. Another example is on the GoFood side. We have over 100 cloud kitchens in this country, and now our merchants are actually able to sell on some of the waste from their operation, from operating out of our cloud kitchens. That's additional revenue for them to a downstream market that we've helped them establish, right? So there's partners now that are purchasing some of this waste material, for example, like used cooking oil, and then repurposing it into something else, whether it's industrial cleaners, whether it's biofuels, what have you, and that revenue is going straight to the merchant, so that reduces their operational expenses. There's a new income as well for them. So these are the types of things that we look for. It takes a lot of iteration and a lot of testing. And so that's why largely 2021, 2022 for us was a lot about sandboxing and piloting and testing and iterating and going back to the drawing board, because we're not confident scaling something that isn't cost effective, that isn't practical, that isn't feasible, and that doesn't have financial impact, whether it's for us as a company or for our partners.
I think just to add, I think Tana made a very, very good point and important point, right, in terms of looking at ESG, because a lot of people think ESG is a cost, additional cost, right? When people think about or sell more sustainable products, you demand a premium. But I think the right way to think about it, right, how do you be more responsible, but also able to reduce costs? So I think looking at the Goto operation, for example, if you're looking at greenhouse gas emissions, how do we look at solutions that can help in providing those solutions, but at the same time not increasing costs significantly for the business? For example, if you are looking at electricity consumptions, then the workforce will be much more mindful in terms of how they use electricity. Similarly for waste management, similarly for packaging. So those are some of the examples that we're also looking at our portfolio companies. I think one of them, Sociola, has similarly gone through, excluding all plastic packaging into recycled boxes as well. So I think that's the direction where we want to drive our startups to in terms of their ESG journey.
But there are many complaints about it's an added cost to the operations. Can I hear from you, Mbak Utari? How do you manage that? How do you manage this added cost into into more productive? Because we all agree that ESG is not just only about cost.
There is two hacks from Aruna if you want to make the ESG not as part of your cost. The first, maybe you can charge it to your customers, because we always believe there is a customer that want to pay more. If we want to shift to the sustainability business models, especially for the fisheries, there is some customers that really wants to pay higher if the fishers and we can produce like the traceability, like seafood products and so on. So I think that's very helpful, because now the industry is not just about the company, it's about the investors that want to move to sustainability, it's about the customers that also wants to buy the product that come from the sustainable business practice. So I think that's the first. The second is about, like Afina and Tana mentioned, it's about how to matchmaking the component of the part of the ESG to the business process. For example, the waste management. In our cases, if we want to produce the zero waste, it means we not just producing the product and just forget about the waste, but in Aruna, the waste also we proceed it to something that valuable. So it will help our business growth like in the future. So it's about how integrating all of that component that potentially can become a cost, but just put it and align it with the ESG strategy. I think that's right.
Maybe I can just add an example on to strengthen what was just said on the first point. I'm going to assume that a lot of you are ESG naysayers, just looking at the expressions on your face, or you're really bored, which shouldn't be the case at all. But we even internally faced quite a lot of pushback in terms of Indonesian consumers wanting to pay the premium, what's called the green premium. And so actually we were able to debunk that too, and just call Mythbusters. What we found last year, we launched a little bit under the table the carbon offset feature in Gojek. So for Go Ride and Go Kart orders, there's an option to offset your ride. We wanted to test it. Offsetting is a residual, I mean, for us, it's not the primary strategy for decarbonization, but it's something we wanted to test out anyway. And what we found within the first kind of 6 months of testing that with no marketing, no strategic push on the company side, is that 500,000 users opted in as a default to offset every single one of their Go Ride and Go Car rides. Not once, every single ride every single order they had in the future as well. So it's a default setting for them now. And they were paying up to 10% more for their average order to be able to offset their rides. And this is a huge like a varied demographic, right? So it's not just one particular group of people, but rather, so again, the concept that Indonesian consumers are not willing to pay for, I mean, they care about the environment, not willing to pay for it. There's just one data point for you.
Such a small change, but the impact is pretty big.
Yeah.
Right. So there are several cases and several examples of what you do, but there are also concerns about the so-called greenwashing. So I'm curious, Afina, how do you see from all the people who claims that they're doing ESG, that they are actually applying this to the real ones? How do you vet it?
I think the best for us is being on the ground. We have an office here in Indonesia and Singapore, which is our two primary markets in Southeast Asia, right? So being on the ground with our team, having done due diligence here is the best thing that you can do. I think it's for us seeing the impact, right? You see Gojek and Tokopedia impacts on the merchants and the drivers. We actually visited Aruna's operations in Janabora, Balikpapan in East Kalimantan, and I think our team is also visiting there this week. So being able to do on-the-ground due diligence is very, very important from that perspective.
Okay, that's really great. Talking about on-the-ground, Tana, you are working with millions of riders, millions of merchants and people.
Don't trust me out.
But that's true, right? You work with a lot of people, and I'm curious, apart from, specifically on Gojek, apart from road insurance and the allotment of shares that you gave to some of them during the IPOs, what are other impactful, concrete ways that the company can do to bring the riders onto equal footing with corporate employees? Like how did you make sure of it?
That how we engage with our drivers, you mean, or?
How you ensure your drivers also have the same, securities and rights with your employees?
So let me tread carefully here. We do not engage with our drivers as employees, right? It's very different stakeholder groups for us, and there's reasons for that. I think for us, our drivers are absolutely a priority stakeholder group, and how we approach them, though, their needs are very different. They are micro entrepreneurs operating on our platform. We facilitate them receiving orders and being able to provide with them a diverse range of income generation opportunities, but they are completely flexible and independent in the sense of what they choose to take on or not. That said, I think we do have a responsibility for the drivers who are full-time drivers, who depend solely on our platform for their livelihoods, that we have all the right tools, resources, products, services in place to be able to support them having long-term sustainable livelihoods, meaning they are not just one emergency medical bill away from falling below the poverty line. They are not one, again, unexpected expense away from not being able to pay for their kids to go to school or pay for their rent or what have you. So these are things we're really, really working on. It takes a lot of collaboration with different stakeholders, including the government, to be able to achieve this. Just last month actually, in December, we launched one of the first credit scoring systems for drivers, meaning now using certain criteria that we've set in our platform, we've been able to provide drivers with a credit score and a credit profile so that some of the financial institution partners we work with, BRI being one of them, provides and facilitating access for them to be able to offer non-predatory micro savings, loans, lines of credit, and what have you, even mortgages now. And so for us, we want to make sure that we are facilitating that kind of access because our drivers, depending on their needs, deserve that. And so that's just going to be the beginning of a few things happening this year related to kind of financial inclusion and how we're approaching the drivers as a priority stakeholder group for now, because we can't do everything at once. But eventually overall to our other stakeholder, we'll roll it out across to our other stakeholder groups as well.
We only have a couple of minutes left on this panel. Time flew, right? So we have questions from the audience. Who wants to answer this? Among the three of you, what is the most lacking in startups, do you think? It is the E or S or the G? Anyone?
Mungkin Avina.
Avina, do you want to?
You see the most.
Thank you, Tana.
What do you think, Avina? What is the most lacking? And in your experience, which one is?
I think because startups generally focus on technology solutions, right? And from that perspective, when we talk to our investors as well, we see technology as relatively lower risk in terms of ESG, particularly on the E side. If you think about businesses such as fintech, B2B payment, right? Generally, the risk factor there in terms of environmental side is relatively low. So from that perspective, I think E is one side that companies are probably less focused on because it's their less risk perspective. I think governance is very, very important, and a lot of startups are focusing on that perspective. I think the trend is changing, though. I think as you see, there's a lot of climate-related startups today, and companies in agriculture, for example, will need to focus more on the environmental risks from that perspective.
And there are a lot of ways to, countless ways to apply this ESG. So, question for all as well. How far do you think ESG adoption has come? And do you have any outlook or expectations of ESG, especially implementations in Indonesia?
Honestly, I think in this part of the world, it is still nascent, right, in terms of ESG integration. And that's why, from our perspective, we want to be a first mover and helping a lot of our startups in terms of capacity building, training, and really looking at ESG in the right way, right? Given that we do get a lot of support as well from our investors and consultants in terms of ESG and impact capacity building. So we work a lot with Aruna here with our investors' help as well with WWF in terms of how we strengthen ESG related risks. Yeah.
I think this is for Tana and Utari. When we're at it, the G part, how do you attract, develop, and retain leadership talent and skills needed to drive the ESG and sustainability strategy and outcomes? And also when we're at it, do you think there's a lot to be done in terms of gender equality in your place of work?
Okay.
Okay, thanks so much.
No, look, I think I already mentioned it earlier before around what we do as a company. The best quote unquote ESG talent you'll have is already in your company now. And so the people who are on the front lines, driving the operations, doing the implementation, the execution of different company priorities and what have you, they're going to know best what kind of ESG efforts are going to be the most practical, the most feasible, the most scalable, and what have you. And so the missing link so far in what we've seen in other startups and organizations has largely been the so-called knowledge or expertise on ESG at a 30,000-foot level. And so this is where, for example, teams like mine, this is our primary role, right? It's to connect what's happening outside in terms of standard setting, in terms of SEC regulations, in terms of international bodies and verifications and certifications and what have you, and then actually linking what's material from that level to what's happening on the ground in the business lines. We had to spend a crap load of time with the business lines, with the business teams to actually understand their operational realities on a day-to-day basis before we could even do that, right? But that is incredibly important for us. And I think that builds up the institutional awareness, the institutional capacity to better understand what is relevant for them from an ESG standpoint. And then on the gender equality question, I mean, look, if you're committed to gender equality, you better be able to just prove that you're paying women and men the same for the same job. If I found out a male peer of mine is being paid more than me, you better be sure I am not there anymore. So I think it's simple. You don't have to make big commitments. You don't have to make big pledges. Just pay your women the same as you're paying your men. And just make sure you have the same, if you don't already have this equal representation in terms of female and males in your company and in your leadership, which is the most important part of it, then set a target to be able to do that. So representation and pay are the two main indicators for me that tell me whether or not an organization is genuinely committed to gender equality or not.
Absolutely agree with you. Unfortunately, our time is up.
No worries.
Do you want still? We can still have a time for you, Tari.
No, it's already covers. It means ESG is a way and a tool to achieve that sustainability to the business itself. Yeah, I think that's
great. Thank you so much. Thank you for your time. Thank you for your answers. Let's meet again in our next event.